Welcome to Stockradar, Stocks on the Move for another week. Today's date is the 2nd of February 2023. My name is Richard Lee and I made the stockradar.com.au website for you. Now I apologise for not coming through to you yesterday. I had a family event which I had to attend yesterday. So here I am today producing what we normally do on a Thursday. So I apologise for not being there yesterday, but hopefully we'll be back to normal next week. I've also got a few builders out the back here at the moment making a bit of a banging noise and a bit of drilling noise, so hopefully that won't come through too much during the video. It's a bit hard to avoid sometimes. Anyway, we're back to the market, and the market's been quite exciting again. We're seeing a lot more stock picks picking up. I'm wearing my Cool Heads, Cool Decisions t-shirt to make sure I'm doing the right thing most of the time, which should be all the time. But there's some good stocks there. We're seeing a few pullbacks in a few stocks at the moment. Some of those insured we're going to have a look at later on. Is this an opportunity? We'll have to wait and see. But generally in the market, there's a few new stock picks coming on board, so we're happy about that, and some stocks will be moving quite well northward, which is a great thing. So looking at the top 10 this week, we've got Blue Scope at the top, IAG, Mineral Resources have been there for a while, Commodities is just pushing to new highs, QBE is doing okay, Stanmore Resources is doing well, Super Retail Group has had a great rally recently in a very short period of time. Technology One's been going for a while. Treasury Wine Estate keeps chipping away at that trend beautifully, and now Altium's starting to recover again, so we're hopefully onto that one there. So some of those stocks looking good. There's some more stocks there. We've got a stock pick review. Some of the returns we've got, Super Retail Group in a couple of weeks is up 15%. Promedicus is now at 14%. A2 Milk up 19%. Been there for a little while, but still 90% is pretty good. And Treasury Wine Estate's now topping 20% as it keeps chipping away at its downtrend, or not downtrend, at the rise it's making at the moment. So don't forget to check all our stocks in our trading centre, entries, exits, alerts, all that sort of business in there. Trend intensity ratings, all there for you every week to review and be updated. In trading tactics this week, I'm just going to go through a little bit about the trend intensity rating indicator and some ideas on how to use it. It's there, it's a great asset for us, it works really well for a lot of things. So I just thought I'd go through 5 little things for you that might give you a bit of an idea and how they can help you. Okay, so let's get to the markets. Firstly, the Dow Jones. As I mentioned before, it's going ahead pretty well. We want the Dow Jones, not the S&P. The Dow Jones, so it's up to its highs here. We're trading in this little range here. We've been there for a couple of months now, but we're holding up nicely. Volume's starting to look a bit better. Momentum's looking a bit better. It's above the average. So the bias is certainly to the upside on this one for the moment, and it always is until you're told otherwise. The moment we're told most of the indicators are looking positive at the moment, we just have this resistance to get through, which is not a significant resistance, but hopefully we'll be able to push through there. Okay, so that's the Dow, and we're now getting a little bit of support from the broader market. We see the S&P 500 has now nudged its area up here. We had this little resistance bubble in here last week with the average, the downtrend line, and this horizontal resistance line identifying it. Now it's through all those points there, and that's a good sign. It's a good push higher too, and some good volume, and momentum is now on the S&P now starting to get into neutral level, and it'll be moving to positive shortly. So a little bit of an upward push here, a correction or a race through to the highs, we don't know. We'll assess that as we go. Now the Nasdaq also looking a little bit chipper out there again, and a really good rally this week. We had some good volume this week. This is starting to turn up pretty well. Still below zero, but looking good, and we're above the average. So again, we had this little resistance bubble in last week, showing you these 3 areas which have all been broken. So that's 3 little bits of evidence that have changed since last week, which is a really good sign. So encouraging. We're looking for a move to R1, which will be our next resistance level for the moment, and we will reassess at that point there. Okay, so that's the Nasdaq, which is looking okay. We go to the commodities, gold. I think it's marked time a bit this week. It has really gone nowhere, but we're still edging towards this R1 level, up around the 2,000 level for gold, and the volume's been good and momentum is good and above the average. So all looks okay for gold at the moment. It's a matter of how high it goes pretty well. Copper's on the up again, having a big downward push, slowly moving higher. Not such a good week this week, but that's okay. The better volume's been on the upside and the lesser volume's on the downside, and that's what we want to see for a rising market. So we still look at this one, that it's above the average, the higher lows through here, higher highs through here, good volume, and momentum starting to turn positive. So all things are looking pretty good for Dr. Copper at the moment, okay? And might give this R2 level a bit of a shake in the near future. So that's probably half the reason why commodities have been so good. And oil again really hasn't done a lot. It's just chopping around above S1, not recovering. Not really doing too much, hasn't taken any resistance yet, so still a little bit on the, probably really still erring on the downside with this one, which might seem strange, but the trend is down, so that's really what we've got. We've got no real evidence, apart from a little bit of support holding there, that this could turn around, but we need to see some resistance levels taken out before we get too excited about the crude price. So that's crude. Then we go to our market. Now, our market's looking nice. It's pushing ahead. It's stronger than all the indices we can see, mainly because of our commodities, which are being a bit better. So it's pushing up towards its highs. So whether it breaks through or not, but it's on track. The momentum's positive. The price action is looking good. It's above the average. So no reason to doubt why it can't at least test R1 and go through there as we slowly get a bit of breadth into this market with more and more stock picks coming on board. Okay, so that's the ASX 200. We'll just check. Now, the stock pick count is up 7 this week to 51 of 183. So it's 50 stocks out of 160 now. So we're getting up towards that 1/3 level, which is pretty good. We haven't seen it there for a while. And we've got one ETF still of 21. There, some of the industry ones have been recovering, but not enough to sort of call them put them in a trending state as yet. So that's the stock pick count, which is looking better. And if we go to the portfolio update, no change from last week apart from a slight improvement in returns. Conservatives is 5 out of 20, and the Energizers are full at 5 and 10 each. Okay, so they're all good. So that's the overseas markets. It's the ASX 200. Excuse me. Now I think we want to get into some stocks. Now, first some stocks go. I'll cover a couple of leaders like I usually do. I'm going to have a little bit of a look at the insurers. Although they've had a little bit of a tough time this week, they're interesting, I think, and we'll see we'll look at what we can see on the charts in a minute. But the trends are sort of these starting to move higher again, coming out of good bases, looking pretty interesting. So, and then I'll cover a couple of other trends that I like at the moment, and then one budding trend that may be about to break up for you as well. So let's go to firstly Westpac, which we haven't really looked at for a while because it's been such a dog bank for a long time that it hasn't really done what the other ones have been doing, which is we've got CBA up near its high, and we've got other banks doing well. So I'm going to look at a slightly longer term picture of this one for you, so you can see what's been happening. So Westpac really has been in a solid downtrend from $40 since 2016, and you can see this fairly steady downtrend line here, which is being pretty fiercely defended by the sellers, lower highs, all the way down here until finally we can actually get a higher low. Now we're getting into a bit of a battleground, a bit of an assessment stage of which way we're going to break up or down. And even now, recently, this last few weeks, if I just blow this up a bit more, it's really been very sideways tracking through here, which really hasn't, I'll just move this ellipse off a little bit so you can see what I'm doing. This area here has been real sideways track without much trading range at all in there. So, what that tells you, I don't know. But all I know is I've got a fairly clear resistance point along here. I've got a downtrend line here. I've got an average which is just broken. Momentum is slightly in positive territory, believe it or not. And volume is a little bit indifferent. So I'm really not too sure. I guess really what I'm looking at here with this ellipse is that this is really the area that I really need to see this to break out of, which has got a lot of resistance here, especially this point here, and then you've got the ultimate high here, which will be a trend reversal from this point here to the high low up through here as a signal for a reversal. So it's still in a downtrend, but verging on turning a little bit. We've got this high low of support, so it's certainly worth keeping an eye on. We start seeing it push through about $26. We're starting to start looking pretty interesting. So that's Westpac for you, and that's what it looks like at the moment. We haven't looked at it for a while, but it is an interesting situation. Trend intensity rating for Westpac is currently 0, so there's really not a lot there. But that's a big downtrend there, so it's not taken lightly at this stage. Okay, WiseTech. This has just been a big purchase recently, a huge purchase in fact, and we've now seen this price making new highs. So is WiseTech off again? Trend rating was 0 last week. It will be a +4 or greater this week. We've got a trend turn. We've got the moving average above here. We've got good volume starting to appear here, and momentum is above 0. So this looks like giving us a nice signal here of a new high. There's really not a lot else to say here. We've got a high low here. We've got a new high here. If it makes a new high, we go with this one, and the signs are looking pretty good. And business-wise, we see the purchase, activities getting a bit better. So I think WiseTech is in an interesting situation, and it will, when it does trend, it will trend very well. Okay, so that's the two main leaders I want to look at today. The next one I want to have a look at is I'm going to go through the insurers for you, only because they look interesting, but we've had a little bit of a short-term hiccup, should I say. So this is actually QBE. If I just blow this one up a little bit more. So this is what we've got here for a while. This is the last 1, 2, 3, 4 years for you. We've got the high up here at $15, the low just below $8. We have been trending higher since the start of 2020, since COVID crash, edging up higher, until this period through late 21, 22 through, it just stopped and couldn't get through. The sellers just prevailed, but admittedly, the buyers did not weaken off, and we didn't see any serious correction back to this area here. So the battleground is pretty important here, and there's a really big congestion, a good battleground of buyers and sellers, and it looks like now the buyers are starting to win this fight, and thus the price is starting to rise. So we've got R2 up here at $15, which is an interesting area, and if we are looking for a longer term turnaround on this one, then ultimately we would be looking for a break above R2. So we're on track to work towards it. We are having a setback this week, a lot of them have, but it's 1 week in this whole big trend, so don't worry about it too much. I think it's probably more an opportunity than anything else. So that's how QBE looks. The trend intensity rating is 10, which is very, very strong. Volume is solid enough. Just momentum's holding in positive territory. It's above the average. So the buyers are certainly putting it towards a trend intensity rating of 10. Okay, so that's QBE. We've now got NHF, or NIB Holdings, I should say. It's up at its high. So another interesting situation where QB's gone through and is approaching another high at R2, whereas NIB Holdings is already at this high. That's been in place for a few years now. And we've got a nice little uptrend towards here. We've got some buyers. It just can't get through. These sellers are tough, and until we break their resolve, we won't be going higher. But we're having another shot here at the moment, and there's a bit of volume starting to appear. This has gone. The momentum's gone positive, and it's looking okay. So I'm looking for a new high. A break above here resumes the long-term uptrend for NIB. Okay, so this is all-time highs up here. And if it breaks through there, that's a pretty significant point, especially with all this 1, 2, 3 big tops there. Okay, so that's NHF. Trend intensity rating is +1, cocked and ready. Insurance Australia, it's already a stock pick. Has been for a while. It's been slowly increasing in value, slowly. We've had a bit of a setback this week again, but I'm not too worried about it. We've had a bit of a breakout above this support, this resistance area here. We had a little bit of volume appearing, the momentum's positive, and the moving average is below the price. So it's all good. Constructively is good. We just need a little bit more buying to get in there to push this high. Trend intensity rating is 10. It may not be the end of this week if it finishes down the bottom there, but for the moment it's been 10. So it's still strong and the bias is still up. So IAG I think may well be an opportunity, especially if it comes back towards this area here, the old breakout point, which will provide a bit of support for the stock. Okay, so that's IAG. The last one we want to go through is Steadfast. The last insurer, again, it's been trending higher since 2020, since COVID, which wasn't that big for this one here. It's wiped out all those losses easily. Trend intensity rating is 8. It's had a nice little consolidation period through here of this uptrending move for the last year or so. And if it starts to push through here, it's going to look very interesting again. Okay, so we do hold it. The trend intensity rating is 8. Of course, we've got our stops in place for the moment. We hold fast for a break to new highs. And hopefully that will come soon. Volume's been very good. It's tapered off as the price has gone sideways. Momentum is strong and it's above the average, so this is pretty good. Okay, so the insurers, as you can see, slightly mixed picture, but they're on the verge of maybe a bit of stardom here, so we'll just have to sort of wait and see. Might surprise you a little bit, but that's just the way the stock market works, as we know. Okay, I'm going to go back to Qantas again. I see it's back up again today. It's just a resilient stock, this one. It's just edging high, just doing it slowly. Volume's okay, momentum's okay, it's above the average. This one looks like it's probably where it's going to head to R1. Trend intensity rating is +8. Is there anything there to make me worried? No, nothing at this stage. A nice breakout of a trading range is good support for a rally. So that's what I would expect this R1 level to be touched at some stage and possibly go through. Who knows? Okay, so that's Qantas, which I just still quite like and have liked for a while. The other one is Pro Medicus, which is really hitting its straps at the moment and is now threatening to make a new high. I'm not too sure what it's done today, but the last 4 weeks have been mighty moves higher, from around about $55 to about $67. We had a nice little trend reversal here, high low. It broke up again. Volume was good, momentum was good, and was above the average. So cracking break with trend intensity rating at plus 10. It came back to correct, found a bit of support at the old resistance area there, the break area, and it's now gone bang, 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 bang. So something's happened there. The volume's been very good, and this looks like it's going to start making some new highs. So that's exciting stuff. So Prometheus, for those of you who are on board, hang on to it, I think, for the moment. Just lift your stop for the moment. Okay, so next one, which might be surprising, is Boral, which had a huge run when Stokes was on board a long time ago. Then he made his bid, and then that he made his play for the company which he got hold of, and then it collapsed in price. Nobody knew what was going to happen. They came back down towards this old support down here near $2. It got supported around $2.40, $3. It traded in that range for a short period of time. Okay, it's reminds me a bit of the Fisher and Paykel chart, huge drop and just trying to recover. And it did eventually. We got a breakout above here. We got a breakout above around about $3, 305. And if I just blow this volume up a bit, because it squeezes up a little bit, you can just see there's a bit of volume here starting to appear in this one here. It is a changed stock from what it was here, so this volume won't be as high, but we've got momentum starting to push above zero. We've got some good volume here. It's above the average. It's completed a trend reversal, and it looks okay, and it's rising, so why not? Boral is trend intensity rating of plus 6, still in the very early stages of trend intensity, where it's still low, and we often look for those ones for push from that 4 to 6 area where it starts to enter a stock from a trend reversal to eventually start pushing it towards that 7 to 10 zone when momentum really gets on board and the trend really gets moving. So this is probably exciting times for Boral at the moment. We know that Mr. Stokes is not a fool, and the share price come down a long way, and I think they'll be looking for this to recover this share price somewhat in the near future. So that's Boral, which looks okay. Now the final one I'm going to go through today is a little opportunity I think might be an interesting one. I think it's in the consumer discretionary sector, is Breville. It has finally found an end to this downtrend since mid-21. Came down, found some good support around $16, $17. Gone through a bit of a trading action pattern. This is all building buying, collecting buys, getting rid of sellers as slowly the price starts to turn. And then all of a sudden these buyers jump on it here. You can see the volume here, pushing these things higher. And now we've gone through here. That's this week, so it's not finished this week. Trend intensity rating was still -3 last week. So it's got through this week, whether it holds there or not. But all this stuff here is good. Good volume on the rally. And this is heavy volume here, quite heavy volume, but still it's held above the low, a good sign. And we've seen the buyers come straight back in and whack it again. It got whacked again. This is so common for a bottoming pattern, for the buyers and sellers to battle out. Sellers get on top, buyers get on top. It chops and changes, but now it looks like the buyers are getting top. And when they start to push it through this point here, that tells me we have a potential trend reversal coming on board. So this one looks pretty good. We're reversing it down. Trend which is right. We've got an accumulation phase here. So now we move into the uptrend phase, and how far it takes that, we'll let our stop loss tell us how far that's going to be. So trend reversal above here. Volume's picking up. Momentum's recovering above the average. Breville looks like a bit of a goer to me. Okay, so that's the stocks I want to go through today. There's swag, more opportunities in the trading centre there for you to have a look at. But for now, I want to go into trading tactics and start talking to you a little bit about how you can, just going to give you a couple of ideas on things you can do with the trend intensity rating and how you can look at it. So the trend intensity indicator, it measures your momentum. It gives you perspective on what the stock's doing. Okay, so this is real momentum power. This is what Super Retail Group had. It had a trend intensity rating of 10 as it kicked through here, with the price reversing upwards, being above the average. Volume was good and momentum kicked into the zero level. So that's the stars aligning. Trend intensity rating of 10. Bang, it goes, and off it goes again. It had now this is never a one-way ride, but it goes, breaks up here, has a small pullback, and then shoots higher again. That was not a good result, I admit, but still the market has a little sense of perceiving these things sometimes. So well perceived by this stock, because it got in well ahead of its own share price rise. Okay, so that's Super Retail Group. It's trend intensity. We're trying to measure momentum, and these are the sort of stocks we don't want to look for. Okay, first off, my first idea on using trend intensity is you often have it move moves into that +4, +6 zone, which is a qualifying zone, without being outrageously momentum driven. It's just had a trend reversal. The things are starting to turn in its favour. So often this is a stage when the new trend is in its infant stages. Okay, we're moving through the cycle of trend intensity, and it goes to +4, +6. Quite likely to move higher. High probability the rating will move to 7 or greater. So keep an eye on some of those stocks into the 4 to 6 zone. They could be the opportunities we're looking for. And I think was the other one. Boral was one of those ones in that zone there. Yes, so that's at rating 6. So that's just one of those stocks. Okay, now, so that's one way you can use it. In looking at that 4 to 6 zone, maybe the early stages of a trend. When it gets into the 7 to 10 zone, momentum is at its peak. Just trend power, the market's going to go higher. Momentum is in full swing. Remember, the price can go higher, momentum can start to turn down. But while momentum is very strong, the price is going to go higher. And it's not until momentum starts turning badly that we get a signal to sell. But for the moment, momentum, the price can still rise and momentum can flatten out. Momentum is just showing acceleration, just showing you speed. So if momentum on the trend is flat, is steady, then the momentum indicator will go sideways, and that's flat. So when the trend intensity rating can get to those high levels, I often comment it, this is really powerful, this is really strong zone, this is where you're going to see the real momentum kick in that 7 to 10 zone. Okay, now the price of a share, like its normal stock cycle of accumulation, trend, distribution, downtrend, accumulation, uptrend, distribution, downtrend. That cycle goes on. So too does the trend intensity scale go through that. So it often goes. Rotates through the scale from the maximum trending down reading in the -10 to -7 to the maximum uptrend reading of +7 to +10. May not get to the extremes of both, but it will get very close. And usually it doesn't just stop in the neutral and go back the other way. It usually goes from one to the next. So we can keep an eye on our stocks that are moving out of that bottoming stage in the red zone into the grey zone and then into the green zone. And that's what you now start moving back into the grey zone, back into the red zone. So that's how it works as a rule. Okay, now another idea is when a stock moves into the neutral zone. Stocks in the neutral zone are certainly worth putting on alert and watching, because when they're in the neutral zone, they're likely, in following that pattern of moving through the cycle, they're likely to then move into that trending zone. So there you watch stocks. Okay, they're the ones you want to really keep an eye on, and there's plenty at the moment in Stockradar in that grey zone ready to move into the green zone. So keep an eye on those stocks. And the last way is, what I find sometimes when I look at a chart, I look at the chart and say, gee, this chart looks really good, it's pretty fantastic. And I go and look at the trend intensity rating and it says, this is only rating a -5. So there are lots of reasons we use the trend intensity. It's there for perspective and there to measure momentum. So it does have the power to give you perspective. So when you look at a chart, look at your rating and see if it agrees. Okay. Now this one say, wow, is it really only 5? And I thought it would have been a 10 or something like that. So it just tempers your emotions a bit, which is what we always like to do. Brings you back to reality. This is the fact. Trend intensity rating. It's just simple calculated measurements of 4 simple trending tools that is very, very reliable. So keep an eye on it. It gives you perspective, and we might just bring you back at a point every now and then when you get a little bit too excited about things. Okay, so that's just a few ideas and a few ways you can use trend intensity. It's a very useful tool. It's very reliable, and hopefully you can make the most of it because it is unique to Stockradar. Okay, proprietary tool. Okay, so the trend intensity indicator. 5 ideas for you to have a look at that there. So that's what I've got for you today. I'm sorry I wasn't around yesterday, but I will be here next Thursday with some more insights. So I hope you all have a good weekend. On the final note, all I will say is the trend intensity indicator is the voice of perspective and momentum. Simple, really. You keep all those things into simple little boxes and it makes life a lot easier. So I just look for trend intensity to give me an idea of perspective on where the market is and what stage of momentum it might be. Okay, so stay safe, watch your trends, heed your stops. You give me a call if you need to have a chat, and I look forward to sending some new insights into you for next week. Okay, thanks very much for listening. I'll see you later.